everyone, and welcome back. My name is Greg Furman, and this is the Forex Weekly Outlook for the week of August the 22nd, 2016. Now, once again, a very important outlook here as we go into next week's trading. This week's presentation will be very, very similar to last week's because some of these key levels are exactly what we need to be talking about. Now, when we look at our direct intermarket correlations here, the first thing we want to look at, of course, in Forex trading, stock trading, commodity trading, is, of course, the US dollar index. Now, in last week's presentation, I've talked about the most significant event risk we've seen in 2016, of course, is or was the Brexit vote, both pre and post Brexit. So when we look at this, the dollar index, we can see it remains trapped in the same basic range. We've had a minor breakout here, only to turn around lower. Now, this past week I found very, very interesting in the sell-off in the US dollar prior to the Fed minutes being released. This is a classic case, guys, of this information being leaked to the major banks, and of course all of a sudden this past Monday and Tuesday we see a big sell-off on the US dollar. Not a surprise we've had a dovish minutes from the Fed, but were they really dovish enough to send the dollar into a tailspin? In my respectful opinion, no, it's not. We remain trapped in the same range. So we can see this bar down here from Friday in the lower part of our range. Only a sustained break of the 93.50 level on the dollar index will actually see a major trend reversal. Now, the same as the equity markets. The equity markets we can see are holding firmly above the Brexit after the Brexit vote. The S&P 500, the DAX, and the Nikkei, along with the CAC 40. However, we can assess here that the Nikkei has come under selling pressure yet again, forcing the dollar yen lower. Now, once again, when I talked about this last week, what I had stated is that we need a sustained break of the 1700 or the 17,000 level, to break free and clear to get this trend reversing back to the upside. That's not happening here, guys. Now, as long as the equities are going lower, in most cases the dollar yen pair is going lower. So that's certainly something we want to take into consideration here when we're doing our Forex trading. Now, we've seen a bit of a bump up in oil. This is probably the last gasp here. We're going to switch over to oil contracts here. We can see that post-Brexit here, oil has had a very substantial sell-off. This looks to be nothing more than a retracement here. Only a break of a sustained break of the $50, $52 per barrel will take the pressure off the downside. But guys, we're coming out of summer driving season. The demand for oil is not overly high right now. So any speculative move here higher is likely the sellers are up here waiting. And right now, believe it or not, the same actually is applying to gold. Now, what I talked about in last week's Forex Weekly Outlook, and gold is a big one because it has a high correlation to the euro and the Swiss franc and some of the other major currencies along with the dollar. But we can assess here that after we've had the Brexit vote, gold immediately caught a bid, but then it retraced. We came back up to where I talked about the levels last week, but we didn't get a break. We didn't even get a test last week of 1360, which still leaves somewhat of a bearish tone to gold prior to, we do have some major event risk next week, which is the US GDP. That could send gold higher, but right now, once again, guys, last week we're not even retesting this level, and gold is moving lower yet again, suggesting that the dollar will very likely turn back to the upside. Now, as we look at some of our other major currencies here on the British pound, US dollar, we can assess that again, after that Brexit vote, we've had follow through to the downside. Now, we've pushed back this previous week back into the 128 area, but we're starting to move higher again. But in my respectful opinion, guys, shorts are still clearly biased, and here's your key level here between this block here, which is 134 and 132. That's where most of the sellers have come back in to the market. So a sustained break of 134 likely taking the pressure off the downside, but I don't see that as of yet. Maybe in September, but again, September is not a great month here. So when we just have a quick visual of these pairs before I go into the major analysis here, we can assess here that nothing has really changed here on the euro, guys. We've got a top here at 114. 30, we've got a range bottom here at 109.20. The range is still fully intact. Absolutely nothing has changed. So for a trend reversal in the euro, we have to break free and clear of 114.50 and stay above that area for at least several trading sessions, which we're not doing. In fact, even getting close to the 114 level is we see the sellers come back out. Same as US Swiss franc. We've got a range bottom here down around 99.50. We've had a couple of little small breaks down here, but inevitably it's turned back higher. The same can be said with dollar yen. If we look at our Brexit bar, we've had a big move up, a big move down, we've had a retracement, but our range bottom is coming in around the 99 level. If those equities can turn back to the upside, the dollar yen will turn back up also. US CAD, same thing here, guys. We've had a break. The majority of the break after the Brexit vote has been to the upside. We're now retracing to the downside based on oil moving higher. So when oil starts to basically top out and move lower, US Canada moves higher. We can see the range bottom 127. This is absolutely critical to understand where these levels are. So at the 127 level, that's where you're going to likely see the buyers come back in. Now, with the other two major commodity currencies, we've got US CAD we've covered, New Zealand US, we can see the same thing on the Brexit. We've got a 73 top in place. We've had multiple tests of this level here, guys. So we may be looking bullish on some of our indicators here, but this is a problem. This is a significant problem that's simply drawing a straight line off of the Brexit high and the Brexit low. This has contained the market. This is likely to continue. We need a sustained break of that 73 level to get this long moving, if there even is a long trade. Now, the same thing with basically Aussie US. It's been slightly more bullish based on the RBA minutes, but again, it's not holding on to that. For the second week in a row, we're again closing below that critical 76.50 level. So not exactly a bullish setup for any of these commodity currencies, suggesting next week the commodities will move lower yet again. So from here, now let's move into our major analysis. Now, when we come into our major analysis using all of the VantagePoint indicators here, you can see that I've left the range drawn in here. Very important that we respect these levels. 95.51 is the key VantagePoint 18-day predicted moving average. We can see that our 3-day predicted moving average is starting to flat out and the market is starting to move higher. Our strength indicator turning higher. Our short-term predicted difference crossing over the long-term predicted difference, moving back up. Our predicted RSI in heavily oversold territory at 25.4. We can assess here if we look at this over the last 3-month period. We can see once the RSI has moved down into these lower levels, we've had a bounce here. So once again, the angle of this line, the way it's pointing back to the upside. Our strength indicator, we can see that basically the downward momentum here is weakening on a very identifiable range bottom after the Brexit. This is what we want to look at here, guys. So it's not necessarily that we're counter trend by going long on the US dollar. We're simply following a pattern that's been in place for basically since the latter part of June. Nothing has changed here. Most traders get all consumed with a bit of a bearish move or a bullish move, and they think that the trend is over. The trend clearly is not over here. Okay, guys? So that's what we have to look at and know those key levels. Now, the other thing I look for is the distance between the VantagePoint predicted moving averages, and they're widening out. So the more wider these levels get, the more likely it is that this trend is going to reverse. So off of that range bottom, I would look for the dollar to potentially to recover next week. Now, with the equity markets, we still hold firm above 2170. 2171 is the key VantagePoint 18-day predicted EMA for next week, but we are definitely starting to go flat. If we look at our predicted short, medium, and long-term predicted differences here, we are above the zero line, but we're just basically going flat. Our predicted MACD is telling us we're losing momentum, but we are still holding above that all-important 60 level on the predicted RSI. So we still have buyers up here, guys, but 2174, the VantagePoint 18-day predicted moving average, that's the level we want to watch for next week, a very, very important level. Now we can see that essentially at 10,472.11, the DAX continues to hold. As long as that DAX is holding above our key vantage point predicted moving average and gold is holding below our range top, then that actually weakens the euro. That doesn't strengthen the euro. That's where I believe that a lot of the pundits, a lot of the analysts may have this a little confused because they're looking at single market analysis. Now that doesn't mean the euro can't go flying through 114 here, guys. What I'm suggesting here is that you want to be very, very cautious of that because we need other triggers to set off a euro rally. And in my respectful opinion, the Fed minutes, again, were somewhat dovish, but I don't feel they were dovish enough. Okay, and I think a rate hike in December is still absolutely on the table. Now, the Nikkei of the equity markets is a concern to me. I need to see this thing break above 17,000 to get that dollar-yen long trade to give me any hope that a long on dollar-yen will work. Okay, so right now, the Nikkei is struggling. 16,568, the key vantage point level, that's the level we want to watch next week. But our indicators are absolutely rolling over short here. And if that's the case, the dollar-yen will have much more downside here, guys. A lot more potentially. Now, when we look at oil going into next week, where you can see we're coming up to that range bottom where from after the Brexit, we've had a significant sell-off. This move, again, appears to be corrective in nature. I don't see a new trend that there's going to be a lot of demand in oil here, guys. I don't see that at all. So right now, I would look for oil to pause, probably if we can even get to that swing high, the Brexit swing high, which would be up around the $52 mark. That's where we're likely going to fail. But again, we can see that as the predicted short, medium, and long-term differences are absolutely getting overextended. Now, one of the best ways to actually look for overbought, most people use oscillators to determine if something is overbought or oversold, like an RSI, for example, a predicted MACD, maybe a stochastic. But the long-term predicted difference from VantagePoint with the medium-term predicted difference, these are very powerful indicators, and they are grossly overextended here, guys. This is warning that basically when they start turning down right here, and we can see them starting to move lower, I think there will be an absolute fantastic short in oil. Now, the same would apply here to gold here, guys. Virtually nothing has changed. If I just draw a straight line right across my screen to 1360, that swing high from the Brexit debacle, I guess we would call it, where they shocked the market and they voted to leave the European Union. Once again here, guys, there has been absolutely nothing for follow through on gold here. So if we took this bar and we, much like what I said last week, and we just remove this bar altogether, that puts gold around 1260 right there. So I'm not saying we're going back to 1260. I'm simply warning everybody that, you know, if there really is real money demand for gold, then it would be moving higher. And the fact of the matter is, guys, it's not. But we are holding, we are not coming into this range bottom at all. So I will give gold the nod that we are probably still going to be long as we hold above the 1300 mark. Now, with gold struggling to move higher, that would signal to me that the euro is probably getting ready to move lower also. Now, once again, our predicted short, medium, and long-term differences, we look at our predicted RSI, if we were so inclined to use it as an overbought condition here, where in this particular case, the angle of this line starting to point downwards. We've seen this before at almost the exact same level. And if we look at this, we did have a rally of 4 or 5 days where the euro sold off from the 112.80 all the way down to about the 110.50. So basically a corrective move. If we are just a corrective move, that would tell me that we would potentially be looking to retest the 111.84 level this week. Now that's the key VantagePoint 18-day predicted moving average, followed by 112.44 and 113.11. So we've closed above all three of them, but you can see we've closed on a down day here, and we've got a huge separation between where the market is and the current VantagePoint 18-day predicted EMA. So this one screams, if nothing else, of a retracement, and I would say at this particular time, that the same thing would apply to US Swiss franc. Myself, with my own direct clients, we are remaining long on this for now. While we hold above the 95.50 level, we can see that our range bottom here, nothing has changed here, guys. We still remain locked in this range, but if we look at the levels after Brexit, clearly it favored the US dollar. We've had a retracement here, we've come back up, we failed in this level right here, which is absolutely a concern, only to come back down, hit the range bottom, and basically the shorts are stonewalled here, and the market turns around and goes back higher. So for this coming week, guys, watch the 95 level very carefully, along with the key 97.19, which is the VantagePoint 18-day predicted EMA. Now, our short and medium-term indicators are again turning back to the upside here. You can see our RSI 26.4 pointing higher. It screams of a retracement, if nothing else, back to the 97.19 area, much like what I discussed with Euro US. Now, with the British pound US dollar, once again with this pair, not a trustworthy pair under these conditions. You can see that we've basically, after the Brexit vote here, we sold off down here, and we've had a considerable amount. We've had far more downside moves than up, and any upside move has been met with sellers. Now, our key vantage point level to go into next week is 130. Let me just clear that, excuse me. We're going to clear this here so everybody can see it. 130.84, the 18-day predicted EMA. We're closing right on that level right here at 130.73. So I think we probably could move a little bit higher on the British pound US dollar if the Euro US pair sells off. Now, if that pair sells off, that's going to basically put selling pressure on a Euro Great Britain, which again would tell me that the Euro upside is probably limited here. So if that's true, the British pound may feed off that, so we'll keep an eye on this. But right now, again, we can see all of our indicators stuck right around this zero line. We've got a crossover in our predicted MACD, but that RSI has hit that very important 60 line that I like, and it's failed, and it's closed the week at 51.8. So a break of 50 has us bearish, and a break of 40 has downward momentum. Case in point, if we look at the triple EMA cross to the downside, we follow this down to our predicted RSI breaking the 40 level. Next thing you know, we have a massive move to the downside. Not saying we're going to get that again here, guys, for next week. I'm saying that we want to be very cautious, and again, we can see where the top is, where basically the buyers, are getting very nervous. Let's just say between 132 and 134. Not a lot of buyers there right now, so shorts still carry the edge. Now, with the dollar yen, guys, I'll talk about this like I talked about it last week, and making sure that we're identifying the levels after the Brexit, after that major fundamental event risk. We have continued to move inside this range. Has anything changed? Absolutely not. I think that this is a very good call from VantagePoint. I'm going to bring this up so everybody can see it. Was this triple EMA cross off of this level here? So basically adding this level to your charts with just a straight line really visually lets you see whether this range bottom is broken. So for next week, the 99 level down here is going to be very, very critical, whether the dollar yen can recover and start moving higher. Our key VantagePoint 18-day predicted EMA comes in at 101.60. That is a big level here, guys. As long as we're below this level, shorts are favored. If we can break above 101.60, we can try longs. But, attempting a small long off of the Brexit bar down around the 99 level with a 50 pip stop is also reasonable. But right now, we have basically some conflict here on the VantagePoint predicted short, medium, and long-term differences. Our RSI is starting to turn back up, but our predicted MACD is holding firm on the downside. So, as is our neural index, another very important indicator I'm highlighting right there. So, we'll look for the short-term indicators. We could have a decent long trade next week, particularly if that GDP number out of the US next week is good. So once again, I'm of the opinion that basically the US government is leaking these numbers. prior to them being released to the public. I think this past week on the FOMC minutes, the way the US dollar sold off on Tuesday is a perfect example of that. So watch out on Wednesday and Thursday of this week. If all of a sudden the dollar yen starts selling off aggressively, then that means somebody knows that GDP number. And again, I must say I was very disappointed this week the way the market all of a sudden sold off, and it's very clearly you can smell a rat here. And then of course we got that dovish minutes. So for next week, watch those key levels that I've discussed, but it does look like the dollar yen is trying to recover. But if you're trading the dollar yen, I'll tell everybody here what I tell my own direct clients: you have to be looking at that Nikkei. If the Nikkei 225, if it's going down, then dollar yen is going down. If the Nikkei is going up, then the dollar yen is going up. That's the trade, and that is a spin-off trade to your pound yen, euro yen, Aussie yen, CAD yen. They all run off the US major pair. So keep a very close eye on that for next week. Now, as we come into the US CAD, again, given the political state of Canada, the current Liberal government here, it does not bode well for the Canadian dollar at all. Falling commodity prices, strike two. So there's very little reason to be buying Canadian dollars here, guys, based on a fundamental or a technical, as we come into this lower known area of support, which is after the Brexit vote. The Brexit vote, you can see that the US CAD's come down, it's gone back up, then it's broken through the range top, it's slipped back in it. Then we had a significant sell-off right here, but this is largely being driven by, of course, that rise in oil prices that we anticipated. But once again, I think this is the last hurrah for oil here. Oil is going to start moving lower once we push back up towards that $50 a barrel, $52 a barrel. That should probably be it for oil. And then US CAD would resume its very clear uptrend here, guys. Clearly, this is in a big uptrend. This is a retracement move. However, if we lose 126.74, this 127 area, I always give it a buffer of about 50 pips. So if we lose sustained break of 126.50, then longs are off the table. But for now, this is not a difficult trade at all. If you know these levels, we can see that the VantagePoint Neural Index, the strength indicator, the short-term predicted difference, they're all picking up on that. Even though the market's moving lower, the VantagePoint indicators, are picking up on strength in this particular pair. That kind of divergence is what we look for. Also, one of my favorite signals from VantagePoint, the medium term crossing over the long-term predicted difference, also warning me that this is basically a buy zone down here around 127, 127.50. And if we get stopped out, we put about a 50, 60 pip stop loss on this. Not a big deal here, guys. We're not risking the farm on this. We're only risking a very small amount on a counter trend position. But again, once again, when we say counter trend and we look at the bigger picture here and we back this up to 1 year ago, this thing has been in a very significant uptrend, hitting all the way up to the 145 level in January. Then it's sunk down lower, but this looks to be nothing more than a retracement here, guys. That's what this looks like. So we want to make sure we still want to understand where these trends are. So Aussie US going to next week. This is another very tricky one here for next week, guys. So let's go through these final two commodity currencies. The key vantage point level is coming in at 76.19. We've closed at 76.25, just slightly above this area. But again, we have this high from the Brexit that it looked very good here based on the RBA, but we couldn't hold above it. Now we're closing below this level yet again, which is right around 76.60. So 76.60 here, guys, this is a big level. We can see the Neural Index is picking up on the choppiness here. But what I will point out to everybody here is the predicted short, medium, and long-term differences, the strength indicator. We have a crossover on our predicted MACD, and we're sitting right on the 40 level on the predicted RSI. So if we break below 40 on the predicted RSI, then basically this thing is going to sell down probably back into the 74 area. Right now, there's a better than 50% chance that that is exactly what's going to happen. So keep an eye on this. If we can hold above 76 76.50, I think we have and of course the 76.19 level, the key VantagePoint 18-day predicted EMA. If we can hold above that level and the 76.60 level, then there's a great long trade here. And the key thing in trading is, guys, don't take a hard line position on I'm only long or I'm only short. The charts are telling us what's going to happen here. We can go to different websites, we can listen to different analysts, but ultimately here, the way I'm breaking this down is pretty straightforward, that essentially if we can hold above this level, then this pair will go higher. And if we can't, this pair will go lower. But an intermarket correlation will be a driving factor. If gold does not get moving, Aussie US is not going to get moving to the upside. Okay, so remember what I've said there. Now, with the New Zealand for next week, we have been both buying and selling this pair. So I'm basically buying into the VantagePoint lower predicted low for the day, the VantagePoint key 8-day and 18-day predicted EMA. Those numbers are coming in right here at 72.40 and 72.01. However, and a big however is coming here, guys. Once again, simply drawing a line across after that major event risk in 2016, the Brexit, we've hit a high of 73. Well, guys, we've tried 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We have tried 11 times to get above this area. So this is what I want to bring to everybody's attention. Most people will look at an indicator, they will look at a chart, and they will simply ignore this straight line that I've drawn right across the screen. I'm looking at the additional indicators from VantagePoint that are of concern to me. The neural index, okay? The neural index is telling me, look, we've got a bit of a problem here. Our short-term predicted difference in our strength indicator is moving lower. Our predicted RSI is 62.8, but it's just not advancing. We want this thing moving up. So when we look at this and we start breaking in the shorter-term indicators from VantagePoint, the first thing we want to do is identify we need next week to hold above 72.01. But when we break the individual crossovers, we can see that a short-term crossover is building right on this known area of resistance. So your order flow, guys, they're going to eat this up. They're going to be selling here every time. And I'm not going to lie to you, I'm doing it too, but I'm also staying with the primary indicators from VantagePoint, which are telling me that it's going up. But these indicators are weakening. They're saying that this trend is losing momentum. Our medium term crossing over our long-term predicted difference. So in short, there's two potential easy trades. A sustained break of 73 will send this pair considerably higher. But if we cannot break through this area, then you want to get your shorts in there immediately, because we are probably coming back into the 70-cent mark. Now, in a rate hike cycle in the US, with my experience over the last 10 years, that would put New Zealand US somewhere around the 70-cent mark, maybe even 68. Is this fair value for the New Zealand dollar up here? Not in my respectful opinion. So there is definitely a short side bias here, but we just have to be very, very cautious. Everything is happening around this 73 mark, guys. So focus around that area. If we get a nice sustained break of 73, I'm happy to get on the long trade and buy this thing even further. But if we can't get through this is a short trade, will probably be one of the easier trades in the coming weeks and months ahead.